Hey, this is Matt from InvestiQuant. Today is Friday, April 23, 2021, and yesterday was a wild day in the markets. The markets opened up fairly flat, had a little bit of consolidation, tested lower there off of the open before rounding back up towards the highs, taking out Thursday's high, consolidating a little bit up there before news came out, and then we took off to the downside on some tax news. When we did that, we took out the prior day's low and then had a little bounce into the close, which created a bearish outside day pattern. It was a bit of a tricky session, though, with news that always kind of screws things up and can make it difficult for traders. In fact, if you're having trouble with reading the market some of these days, you might be a good candidate to just trade our auto trading portfolio. It was able to trade yesterday and take out about $1,500 of profit out of the market during yesterday's tricky session, but it does so without you having to click any buttons or anything. You just allocate some money to it and it trades for you. But that may be a good option for some of you guys that are finding the market tricky and tough to read. The auto trading portfolio would do all of that work for you, and you'd still have exposure to these ES markets. So that might be of interest to you. There's a little link below if you want to learn more about our auto trading program. But back to this pattern yesterday where we had the bearish outside day. A bearish outside day is where you take out the high and the low of the prior session and you close below the open. So you get a red candlestick that has extremes that are beyond the prior day extremes. And that's a pattern that we're going to be looking at this morning using all four instruments and a setup that gets long at the open of regular trading hours, which is 9:30 a.m. Eastern time. It exits at the close, which is 4:15 p.m. Eastern time. Now, currently, the overnight session is consolidating a bit higher, so I'm going to add gap up for the gap direction today. Next, I'm going to go into the price pattern section, and in the candlesticks category, I'm going to add that yesterday was a bearish outside day. So let me hit equals next to bearish outside day, and then put it in a similar market environment. We are below a 10-day simple moving average, but above a 200-day simple moving average. And now I can click View Results. And here we go. These are the results based upon entering the market long at 9:30 a.m. Eastern time, exiting at the close, 4:15 p.m. Eastern time, when you are trading above the prior session close at the open. And the prior day was a bearish outside day that closed below a 10-day simple moving average, but above a 200-day simple moving average. Now, historically, the S&P has 54 samples, the NASDAQ 60, the Dow 59, and the Russell 51. And the win rates on them are fairly favored for 3 out of the 4. You've got the S&P coming in at 61% of these have finished with a green candlestick for the day. The NASDAQ is up at 65% of those 60 samples have finished with a green candlestick for the day. The Dow, 61%. And the Russell is more neutral there at 53%. The average win and average loss, the average loss is a little bit larger than the average win in the S&P. Not a huge difference there, but it is a little bit larger. There is a sizable difference, though, for the NASDAQ, where the average loss is quite a bit larger, although it doesn't happen nearly as often as the wins do. The average loss is larger there. The average loss larger in the Dow as well, so all three of those instruments that have favored win rates have larger average losses compared to their average wins. The Russell is the one that's kind of a 50-50 on a win rate, and the average win to average loss is nearly identical. So absolutely nothing to read into that Russell set of stats there. The others favor the upside more historically, but the bigger moves have been on the downside for that day. So hopefully you found that helpful. Good luck today, guys, and we will see you next time.